staying with jobs. An improving job market is making some Americans more confident. As a result, they are willing to spend on things like cars, homes, and appliances. Numbers out today showing that consumer confidence is holding close to the highest level in a year. And that confidence has also been good for many retailers. But what about one that tends to do well, particularly in a slowing economy? We're talking about Family Dollar. Shares are up nearly 14% in the last year and up just about 1% so far this year. Let's bring in Craig Johnson. He's president of Customer Growth Partners. That's a retail consulting and research firm, to get his thoughts on Family Dollar. Craig, what do you think about Family Dollar?
Well, Family Dollar operates in one of the strongest growing sectors of the retail economy, the deep discount retail. The dollar stores have been exceptionally productive over the last few years.
They're really running some tailwinds coming off the crisis, aren't they?
Big time, but they've been growing for basically the past decade. You go back a decade ago, they were only about a 0.5% share of the U.S. market. Now they've basically almost tripled that over the last decade. So very rapidly growing. Because of the economic pressures on the one hand, but also they've capitalized on, at least the other two or the three major dollar stores, a little bit more so in terms of expanding.
You mentioned that a few years ago, a small percentage of the overall retail market. They've grown rapidly. How big can they get? I mean, how big a market can it become?
Well, we estimate that it can get not quite up to 5%, but a good 3 or 4%. Again, they've gone from 0.5% up to about almost 1.5% of the retail market. And this is even though they haven't fully penetrated the rest of the U.S. that heavily. Dollar General, Dollar Tree, and Family Dollar, who we're talking about mostly today, have basically kept away from the West Coast that much. And they're gradually entering it much more rapidly now.
Talk to me about returns, because Family Dollar is lagging the other players, Dollar General and Dollar Tree. Why is that?
Well, we think that the managements at Dollar Tree and Dollar General have just done a superb job over the last few years, really now, in terms of catering to the customers, modernizing their stores, as well as expanding. So they've earned some tremendous operating margins. Meanwhile, Family Dollar has lagged over the last few years and just hasn't developed the kind of operating margins of the 10-12% that both Dollar General and Dollar Tree in particular
Does that
have.
mean Family Dollar needs new management in your view?
I'm not sure it does, but to their credit, Howard Levine, their CEO, has been bringing in new senior talent over the last several months, recognizing that they really needed to upgrade their efforts, become more aggressive to attack what is really a burgeoning market.
So he's sensitive to what might not be working right and what needs to be fixed.
Yeah, so I think they're on the right path, but they're still lagging the other two majors.
Earnings tomorrow, what should we expect?
Well, we're looking for some really pretty good improvement there. Family Dollar, again, has been lagging both Dollar Tree and Dollar General.
Their margins were really problematic in the last earnings release.
That is exactly right, again, particularly in comparison with the two direct peers. But they are catching up, and so we're looking for some better numbers tomorrow. Again, our specific estimates are for our clients, but we're looking for some better numbers. And here's a company that's really on the rebound after lagging, frankly, for 3 or 4 years. So we're cautiously optimistic.
Craig, do you think they're the better buy because they have been lagging and you see improvement coming down the road?
Well, we don't do valuations. It's above my pay grade. But we do like the story that they have, that they've been behind the curve and now they're catching up. They're expanding into California. They opened the first 4 California stores a few months ago. And so they're hitting the real growth areas of the real turnaround areas of the economy. So we're looking for some good things.
It's an interesting play because I think most folks thought it made sense for them to do fairly well during the downturn, but customers are still staying with them, aren't they?
That's the great thing about the deep discount sector, and this is whether it's the $3 or the hard discounters, people like Aldi. People like the fact that they can get both great prices and the convenience. There's thousands of these stores. There's more Dollar Generals out than there are Target and Walmart combined.
They're kind of popping up all over, aren't they?
So you have the proximity. They compete by points of presence, convenience, the quickness of the trip in and out, and the great prices. So you don't have to spend 2 hours navigating a Walmart, a super Walmart, to get what you in and out and get prices pretty close to Walmart.
I got about 30 seconds left here. So what's the risk to the Family Dollar story in your view?
Well, we think the risk is, the one challenge is there's not a lot of barriers to entry for any of these formats. You can open up, the real estate is fairly easy to get, you can open it up, etc. There's also a lot of management turnover in these stores at the individual store level, and that is a little bit of a challenge. challenge because the managers, the individual store managers, are essential to the business model's success. Because there's a whole issue, a whole variety of issues at the local store level.
All right, well, good to break it down with you, Craig. Thank you so much.
Glad to be here, Carol.
Appreciate it. Craig Johnson, President of Customer Growth Partners, a retail consulting and research firm.